Good morning and happy Friday, everybody. We are here. We are finishing off this week strong. It's been an action-packed week. We had Powell testifying. We had CPI data that came out yesterday. You if you were here, then you got the exact information that you needed in order to be alert and have the correct expectations because, right, that CPI data was bullish, better than expected, right? The first time that we've had negative CPI data since 2020, right? 4 years, literally in 4 years, the first time we've had negative CPI data. You can't get better than that. What happens? The market drops, right? It is so important to be here in an environment where people are giving you actionable, good information to close the gap between where you are and where you want to be. The market is not cut and dry, right? Why did we drop yesterday? Because we hit our price targets on SPY, right? You guys know that once we typically hit price target number two, you come back down to retrace breakout. Well, SPY hit price target number two on a number of different time frames yesterday, both on the weekly time frame and on the daily time frame. What does that mean? That means the SPY was double likely to retrace, which means come back or sell off, right? Um, it's important to know where to take profit in this game. And we had the exact spot to take profit, whether you look at, EA or you look at SPY. You don't get paid just by being in a position that does well. You only get paid once you take profit, right? Once you withdraw profit from that position. Oh, don't think I can raise this up anymore. I feel like I'm not sitting as high as I normally am. But yeah, so there's finesse involved with this market. There is strategy involved with this market. There are tools that you need in order to be involved with this market and do well consistently. Put yourself in the environment to leverage that stuff, right? That information. It's not by coincidence, again, that we are consistently on the right side of things as opposed to the wrong side of things. Got into SPY right when those rockets were taking off at the end of May and then got out right where we needed to, right? And it's not saying that SPY is done and that, we're headed down from here for the next 6 months, but knowing when to get out is key, right? Knowing when to get out is key. Knowing how and what to expect is key. If you just draw general, like, oh, this happened, so this must occur, then you're gonna learn some lessons here in this market, right? Because bullish news, right? What you might perceive as bullish does not necessarily equate to bullish price action. And yesterday was like the best possible example of that, right? Because we got news so bullish we hadn't seen it in 4 years. And what did the market do? Dropped. So you can never say, oh, because of this, this will happen in markets, or because of this, this will happen in markets. Number one, you always have to see how markets react to news, right? Number two, you have to be aware of relevant levels, which means you have to know how to read the charts. Those two things in combination will allow you to be successful and do things like we did yesterday. We'll just take profit at a great spot, right? And not have to worry about sitting through all that red. So let's go ahead and dive into what we got going on this fine Friday. Good morning, everybody. Jatrice, Michelle, Alicia, Barbara, Coco, good morning. Glad to have everybody here and to finish Friday strong. As always, we're here to get 1% better, right? And I think we've done that this week more than enough times, right? So throw that one in the chat signifying your intention to do that exact same thing today. Get 1% better today. And let's do exactly what our top news is about, which is taking it to the bank, right? Deposit that intention, take it to the bank. And in this case, what's fun is that it actually does return to you in the form of real money, right? So get ready for the coming flood of corporate earnings with the big banks ready to kick off the festivities. As interest rates are still high and Federal Reserve rate cuts remain in the future, many expect loan growth and net interest income to remain weak, but investment banking fees are likely to benefit as activity starts to rebound. For investors in the sector, guidance may be almost as important as the results and can shed light on how banks are preparing for the upcoming monetary cycle. So mark your calendar. Coming up this morning, we've got Q1 earnings from JP Morgan Chase, JPM, Citigroup, whose ticker is C, Wells Fargo, whose ticker is WFC. Then we've got Goldman Sachs on Monday with Morgan Stanley and Bank of America releasing quarterly numbers on Tuesday. There's also a whole host of regional players, asset managers, credit card companies, and other financial institutions reporting over the next week, right? So keep your eyes peeled on the earnings calendar. I normally post those, at the beginning of the week, and just, make sure that you have an idea of who's reporting when and what you have going on, because there might be some opportunity there, some of which we talked about last night during the live Q&A session for the group members. Now, in terms of many economic stats will be on watch in the coming sessions, even for those not invested in the banking industry, which recently passed the latest rounds of Fed stress tests. Provisions for credit losses can provide a window into how well banks expect the economy to hold up and will shed light on the viability of commercial real estate. Consumer spending and credit card delinquencies will also be in the spotlight. And don't forget comments on the macro situation from some of the biggest CEOs on Wall Street, right? You get to hear from people typically like Jamie Dimon. The earnings show, quote, consensus annual forecast for 2024 Q2 earnings to rise 9% with expectations of continued growth for the second half. So positive future guidance revisions are expected, right? Seeking Alpha analyst David Lerner. Quote, however, every earnings season, the market overreacts both on the upside and the downside. I fear that expectations are too high for earnings results and that a lot of growth stocks will be taken to the woodshed. This is why I think traders should trim profitable positions and do the same for trades that haven't moved all year. For long term investments, stick with it, especially if you're still adding funds to your investments. So, moving on here, economy, is it in disinflation? The consumer price index, CPI, cooled further in June, edging down 0.1% month over month compared to the 0.1% rise expected, right? So it's not that inflation didn't go up, right? Consumer price index, this measure of inflation, it's not that inflation didn't go up. It's that it actually went down, which is the best case scenario that you could ask for. We expected it to rise by zero point 0.1. It dropped by zero point 0.1. Similar progress was seen in core CPI, giving the Federal Reserve another data point indicating inflation is heading toward its 2% goal. While stock futures initially rose, market indices ended largely lower on Thursday, weighed down by the Magnificent Seven. Quote, we're clearly in a pronounced disinflationary state based on the last three inflation reports, said Seeking Alpha analyst Jeremy Lacoste, adding the latest CPI puts a September rate cut on the table. We talked about that yesterday as we got the data. Global news, China investment. European allies will curtail their investment in China if Beijing continues its indirect help to Russia, President Biden announced at the conclusion of NATO's summit in Washington. I also saw that they're going to mention it here, so I won't even mention it. China denied supporting Russia's defense industry, saying NATO's claim that China is responsible for the Ukraine crisis is ill motivated and undermines Beijing's ties with Europe. Biden's press conference was also closely watched amid concerns over his fitness and included some verbal stumbles, accidentally referring to Kamala Harris as Vice President Trump and introducing Ukraine's Volodymyr Zelensky as President Putin. Just gonna leave that where it lies, right? I'm gonna leave that where it lies. Automotive, another delay. Tesla swung 8% lower on Thursday after Bloomberg reported that the company may delay its robotaxi event scheduled for August 8th to October as it needs more time to build autonomous vehicle prototypes. CEO Elon Musk has been mentioning the robotaxi event since April, while the robotaxi concept has been part of Tesla's master plan for at least 8 years. JP Morgan recently warned that Tesla investors may have gotten ahead of themselves in terms of banking in a robotaxi premium. While most Seeking Alpha subscribers think Tesla should remain in the Magnificent Seven, here are two stocks that could potentially replace the EV maker on the list. No one really cares. Everybody has been talking about who will replace Tesla doing this, Tesla doing that. You guys know how I feel about Tesla moving forward. They've solidified their position in the future by virtue of them being paired with Elon Musk, right? Elon isn't perfect. The dude's jacked up. Everybody's jacked up, right? Especially at that level of impact. I don't think you get to that level without being crazy, but at the end of the day, they have all the elements they need to continue to succeed in this next gold rush, right? I mean, Elon beat everybody on monopolizing space. They launched like 10 times as much as anyone else launches spaceships, right? And he's providing internet to areas of the world that had no internet. It's like anything that is future based, he's already on top of. And I think the one thing he had a hiccup with was, leaving OpenAI early because he was a part of OpenAI. But Tesla already has a lot of great elements to be a major AI player immediately, not just AI, but AI robotics, right? Talking about full self driving, talking about the Optimus robots, talking about all the training data that they have access to via Twitter, right? All the training data that they have access to via the full self driving testing. Like you can't really ask for better raw elements than what they have. So they'll continue to be what they have always been, which is outside of the box and breaking any type of mold that you try and put on them, right? It's always been bigger than an automotive company, and I think the next, 5 years will continue to show that. Today's markets in Asia, Japan down 2.5%, Hong Kong up 2.6%, China flat, India up 0.8%, London up zero point 0.4, Paris up zero point 0.7, Frankfurt up zero point 0.4, the Dow up zero point 0.1, S&P up zero point 0.1, Nasdaq down zero point 0.1. Let's see if that's still the case. I haven't finished logging in yet. By the way, Tesla got that big old weekly breakout that paid us last week, right? Coming into this week. And all Tesla did was fall to where it was on Monday, right? So Tesla is essentially just ending the week where it started the week. It's important to keep perspective when you come to these types of, things like drops and stuff like that. So Tesla can fall further and still just be considered a retracement of breakout, right? As well as a great spot to get in. But you got to know what that exact spot is. Otherwise, you're just shooting in the dark. So make sure you understand, right? Because if we do continue and we get back beneath that downtrend, then yeah, Tesla's back to being cooked and we don't care about it. But until that happens, right, you got to go with the major buying that occurred and push Tesla through that downtrend. It's been struggling and wrestling with for a number of months. Now, today's economic calendar, we got the producer price index, right? The PPI data. I'm waiting for SPY to show up here. Maybe I'll pull up the PPI data in the meantime. Okay, that was yesterday. Can we get today? Oh, don't have the results for today. That's no fun. Well, let's see how the market at least is reacting to whatever came up. Looks like no real reaction. Time is 8:15. Yeah, 8:30. Looks like initially we got some push down and then it was bought back up, and then now we're pushing up kind of to open, I believe, flat, maybe a little up from where we closed yesterday. Yeah, opening slightly green from where we were yesterday. So maybe up point 0.1, point 0.2, not really varying much from what was just reported here in this newsletter. What else is happening? We got our rapid fire stock news rundown here. Delta Airlines, ticker DAL, leads airline stocks lower after fair discount warning. Earnings summary, PepsiCo, ticker PEP, results mixed, outlook affirmed. Pfizer, ticker PFE, advances development of once daily weight loss pill. Mizuho says PayPal made profit from Apple EU settlement. Rio Tinto, ticker RIO, weighs potential bid for tech resources. AI made up a third of all venture capital funding this quarter. Putting your money to work for your markets, learning AI. Those are the two most important things that you can do this year. Been saying it for months. We'll continue saying it. Dollar General to pay fine for workplace safety violations. Report Boeing, ticker BA, sees further delays in 737 MAX plane deliveries. Bluebird, ticker BLBD, rallies after landing DOE grant for EV manufacturing. And then this weight loss stock is the best alternative to Lilly and Novo. So this is just, an article where they talk about Amgen as being the best alternative to Lilly and Novo. So, obviously do your own research, look deeper into that. You guys know how I feel about Lilly and Novo, right? Novo extremely underrated, finally starting to get the recognition that it deserves. Eli Lilly, the most well-known, and Michael Jordan of pharmaceutical stocks. Then we've got Hims that, came in and made some rustling in the arena, kind of coming out with generic versions, but I think they also had some negative news that just came out. So make sure to keep an eye on that, especially for anything that you're long-term invested in. But that'll wrap us up this week, y'all. Friday, July 12th, 2024. It's been a great week. We're heading into earnings season next week. We kick things off. Make sure to pay yourself, as always. You don't get paid unless you withdraw it. So pay yourself. Remain patient. Do not let that money burn a hole through your pocket. If you got trading gains, do not touch that buying power that you just got from those profits for at least 2 business days, right? And just you'll be good. You'll coast. You'll continue to grow your account. So congrats to everyone executing this week. You either win or you learn. So let's continue to execute so that we do one of those two things and we get 1% better daily. Have a great and a safe weekend. I'll see you back here on Monday for our next pre-market prep session. Have a good one.